The important objective for the Exim Bank is to enhance the trading opportunities inside the India. So these are the important objectives of Exim Bank. So they provide the skill development courses or skill development activities to the youth of the India in order to procure the entrepreneurship skills inside them. They are the companies who are involved in the finance related matters, but they don't provide any such kind of banking related services to the public. Hello students, how are you all? I hope you are doing good. So I welcome you to the last session in unit number 2, that is financial institutions. So the subject we are going to learn is about financial market and services, and today's session is going to be the last session in unit number 2. So let me give my brief introduction before I start with the session. I am Vaishnavi, Faculty of Commerce from Vidhyaashram First Grade College, Temple of Excellence, MYSURU. So we'll start with the agenda first. So in the previous session, we have discussed about the different banks, financial institutions that are there in India and their objectives and functions of it. So continuing, so we are going to learn about the objectives and functions of Exim Bank. Next, we are going to learn National Small Industries Corporation objectives and functions. Next, National Industrial Development Corporation of India objectives and functions. And we are going to learn about non-banking financial companies and what are the RBI measures for non-banking financial companies. So this is the agenda for today's session. So we'll straight away move on to the first bank, that is Exim Bank. So we'll start with the introduction. So the Exim Bank is called as Export and Import Bank. It was established in the year 1982. So under the Act of Export Import Bank of Indian Act 1982. So it has been providing the long-term service finances to the companies or to the industries which are mainly involved in the export and import in the country. So this has been set up to provide long-term finance, as I've told, to the exporters as well as to the importers to meet their financial needs related to the international trade of the country. So this is the bank that has been set up by the government of India, and it has been usually regulated by the Reserve Bank of India. So it is the biggest bank and is the most salient institution especially in case of exports and imports in the country. So the Indian government owned the Exim Bank, and which was regulated by the Reserve Bank of India, and this is a bank that has been usually governed by the government of India. So this is a basic introduction of Exim Bank. So we'll move with the first objectives. So we'll start with the first objective. So to ensure the export or import projection. So the basic objective I have told, to make sure that or to take care of the easy importation and exportation inside the country. Next objective, to encourage and facilitate the export of international and technical and merchant banking services as well as their joint ventures. So one more objective of Exim Bank is to facilitate the exportation as well as to provide the merchant banking services to the public as well as the any kind of joint ventures. So next objective, to lengthen the letter of credits and credit of the buyers. So letter of credit is it's a kind of in process, or it's a kind of a services that has been provided by the Exim Bank. So wherein it's a credit that has been issued to the either importer or exporter based on the credibility of them, and it has been issued to them based on the type of the contract that they have taken up. So to provide the letter of credits to them based on the credit of the buyers. Next is to make competition for exporters on the financial terms, to make sure there is a healthy competition has been maintained on to the exporters on the financial terms. One more objective, to provide timely and relevant information to exporters of India about their opportunities in various export fields and areas. So they also provide some counseling or assistance to the exporters regarding the type of the goods that they can export at the current time, and they also provide the different kind of export opportunities to the people who are doing in the export business in India. Next objectives, so to provide the advice on currency related issues so that producers or manufacturers or India may perform the cost effective exports and imports. So one more objective here is to provide the assistance regarding the long term services or long term finances to the producers or the manufacturers of the country by providing the cost effective term loans to the importers or exporters. Next, to look into Indian finance problems and give the resolution policies for it. So this is one more objective of the Exim banks, to look into the financial condition of the country and to provide the assistance or to provide any kind of regulations or suggestions to the Reserve Bank of India. Next objective, to enhance and promote the trade of foreigners in the country of India. So the important objective for the Exim Bank is to enhance the trading opportunities inside the India. So these are the important objectives of Exim Bank. So next we will talk about the functions of Exim Bank. Under that, first function, financial export and import of services of goods from the country as Exim trade. So they provide the assistance towards import and export of the goods or services from India in the form of an Exim trade. Next function, to help in financing the export as well as import of the machines. So they also provide the assistance or provide the finances to the industry people to adopt to the latest technology, that is to import or export any latest technology to or from to the India. So the next function, it also helps refinance the bank services as well as other institutions for foreign financing, trade or Exim trade. So the function, one more function of Exim Bank is to provide the refinancing services to any bank or to any financial institutions which are involved in foreign financing or any kind of Exim trade, that is export and import trade. Next function, it helps in financing the export or import of services and goods from other countries also. So it helps in providing the financial assistance to the industries in exporting and import of the goods from other countries as well. Next function, it also provides financial assistance for the businesses in foreign, also helps the businesses to join the joint venture in foreign. So they also provide assistance to the Indian companies to act like a foreign depositors in the foreign country, and they also provide the assistance in the India regarding any kind of joint venture that any foreign companies, they are going to come into India and set up in company or they're going to set up the business in India. So they provide the both services to the Indian companies as well as to the foreign companies. So next function, it also helps in providing the finances for technical assets to exports and imports. So as I've told, so one of the objective, the same function here also. So it provides the assistance to the exporters and importers in adopting the new technology into their industries. Next function, Exim trade helps in functioning the export and import of the merchant navy banks. So they usually provide the financial services or export and import services to the merchant navy banks. Next function, Exim Bank also plays a major role in writing the shares, bonds, stocks as well as debentures involved in foreign companies trade. So they also act like an underwriters in case of underwriting any shares or any bonds or any debentures for any foreign companies in India. Next function, it also offers LOCs, that is letter of credit, and short-term loans to foreign government and banks. They also provide the letter of credit services to the any foreign banks or any foreign businesses or companies, and they also provide this short-term loans to them. Next function, to provide the finance to cooperative banks. They also sometimes provide the financial assistance to the small cooperative banks in India. So these are the important functions of the Exim Bank. So next we'll move on to the next bank, that is National Small Industries Corporation of India. So this National Small Industries Corporation, NSIC, was established the year 1955 in order to promote, aid and foster the growth of small business units in the countries. So the basic objective behind NSIC that has been set up in the year 1955, the main objective here is to foster the growth of small business units in the countries, that is small industries in the country. The NSIC established to cater this need of the entrepreneur. NSIC provides plant, machinery and equipment on hire purchase basis. So apart from providing the loans to the entrepreneurs, they also involved in providing the hire purchase or lease based purchase for plant, machinery and any kind of heavy duty equipments to the industries. So under its special scheme, entrepreneurs can procure indigenous as well as imported machinery. So they have some schemes, or they have some loan schemes under the bank where the entrepreneurs can avail the services of the NSIC in importing any such kind of heavy duty equipments from foreign countries. So this is a basic introduction of NSIC. So next we'll move on to the objectives of NSIC. The first objective here, facilitating the growth of small scale industries. So as I've told, so it has been the main objective here is to foster the growth of the small scale industries. So that's the first basic objective. Next objective, promoting and supporting the entrepreneurship. So they usually provide the promoting and they also support any entrepreneurs ideas and entrepreneur startups in India. Next, assisting in marketing products manufacturing by SSIs. So they also provide, or they also give the services regarding the marketing related strategies or segments for the small scale industries. Next objective, offering technical and financial assistance to the SSIs. They also provide the financial assistance in the form of long-term or short-term loans and also provide the technical assistance to the small-scale industries. Next objective, promoting technology adoption and modernization in SSIs. So they also provide the opportunity to adopt to the latest technology in the industries by adopting to the new kind of plant or machinery or new kind of technology inside the industry. So they provide the services towards adopting the new technology. Next objective, facilitating exports of products manufactured by the SSIs. They also provide the assistance in exporting the goods that are being manufactured in India. That means they encourage the export percentage of for the SSI industries. So next is about supporting SSIs in obtaining raw materials and equipments. They provide the support assistance to the small scale industries in procuring the raw materials as well as the any equipment to the industry. Next objective, conducting skill development programs for SSI. They also provide the training facilities or skill development courses to the entrepreneurs who comes under any scheme that are being introduced by the bank. Next is providing advisory services and guidance to the SSI. So they also provide the administration services like providing or assisting in case of advisory committee, and they also give the suggestions for the betterment of the running of small scale industries. Next is about facilitating collaboration between the SSI and larger industries. They also act like a medium in collaborating or merging or having a good relationship between the small scale industries and the large scale industries. So these are the objectives of NSIC. Next we'll move on to the functions of NSIC. Under that, first one, business support services. So the NSIC provides a wide range of business support services to small and medium enterprises. These services include marketing assistance, raw material procurement assistance, technology support, credit facilitation and training and consultancy. Like I have told, the objectives of the NSIC, so they are going to act in as a function of it. So they provide the services in case of raw materials, financial assistance, marketing assistance, and they also provide technological support, credit facilities to the small and medium enterprises. Next function, credit facilitation. So one of the major function of NSIC is to facilitate credit for small businesses. So the NSIC has tie-ups with various financial institutions, banks and non-banking financial companies to provide credit to the SMEs at attractive interest rates. So they provide the financial assistance to the small scale industries by tying up with the larger financial institutions, insurance companies, or any commercial banks in India, and they also provide the lesser interest rates loans to the small scale industries. Next function, export promotion. So they also helps the small scale industries in exporting the goods or services to the foreign countries. So the NSIC operate as an export promotion program designed to support the SMEs in expanding their export activities and entering new markets. So they provide the assistance towards exporting the goods and entering into the foreign markets. So next function, entrepreneurship development. So the NSIC operates as an entrepreneurship development program with the primary goal of nurturing and promoting entrepreneurship among the India's youth. So they provide the skill development courses or skill development activities to the youth of the India in order to procure the entrepreneurship skills inside them, and they also provide the assistance to the current entrepreneurs. So and next is about like this program. The NSIC offers comprehensive training and support to the aspiring entrepreneurs. So this support encompasses various aspects include project identification, market research, financial management, and guidance in formulating the robust business plans. So in what way they are going to help the entrepreneurs? In helping them in case of maintaining a project or preparing a project, and market research. They are going to help in the market research and financial management and guidance in the formulating of robust any business ideas for the people or for the entrepreneurs. So these are the functions of NSIC. So next we'll move on to the National Industrial Development Corporation of India, that is NIDC. So the NIDC was established on 20th October 1954 by the central government, which has been regarded mainly as the instrument to achieve a balanced development of industries in the private as well as the public sector. So the basic objective behind setting up this bank is to have a balanced environment in the industries. In case of larger industries, I mean the public industries as well as in the private industries. The NIDC plans and formulates projects for setting up new industries or for developing new lines of production. So they help in the setting of new kind of industries, or in case of new lines of production, they are going to help in this. So it undertakes establishment of such undertakings which help in the opinion of the central government would contribute to the industrial development of India. So they take the opinions of the central government and they also help in the development of the private and public sector industries in the India. So this is a basic introduction of NIDC. So we'll move on to the objectives of it. The first objective, promoting industrial development in India. So the basic objective here, to promote the private industries as well as the public industries in India. Next, to provide financial assistance to the industrial project. So NIDC also provides the financial assistance to the industries that are set up in India. So next objective, supporting infrastructure development initiatives. So they also provide the infrastructural projects. They also provide any loans for infrastructure development initiatives in the country. Next objective, encouraging entrepreneurship and innovation. So one more objective is to encourage the entrepreneurship ideas or skills in the mindsets of the people and the innovative products into the market. Next, facilitating technology adoption in the industries. So they provide the assistance towards adopting to the new kind of technology, whether it might be in administration, HR, or financial related things, or any new kind of R&D developments needs to be maintained in the company in order to obtain the new technology inside the industry. Next objective, promoting sustainable industrial growth. So they also involved in the sustainable growth of the industries in India. Next objective, supporting the development of backward areas. So they also provide the assistance in improvising the community related areas or surroundings in the city. Next objective, fostering collaboration between industries and government agencies. So they act like a medium between the private agencies and the government agencies, and they usually provide the connections between them. Next objective, facilitating industrial expansion and modernization. So they provide the objective, or they provide the opportunity to improvise the centralization to provide the industrialization, expansion, and the modernization. Next, contributing to the overall economic development of India. So they provide the opportunity to have a overall development, economical development in India. So continuing providing financial assistance. So one more objective, as I've told. So the main objective is to provide the financial assistance to the industries in the form of loans, equity participation, and guarantees. So next objective, promoting industrial projects. So NIDC, it usually identifies the viable industry projects across the different sectors. That means any kind of project that need to be developed or that need to be given attention in the society. So that kind of projects will be identified, and that will be given attention in promoting the industrial development inside the country. So these are the important objectives of NIDC. So next is about the functions. Under that first function, supporting infrastructure development. So NIDC usually helps in promoting the infrastructure facilities inside the country. They also provide the term loans to the any construction company who are going to lay the roads, or construction of dams, or construction of buildings inside the city. So next is encouraging the entrepreneurship. So this is the basic objective of any kind of a bank, to improvise the entrepreneur qualities inside the people or inside the person, to help and to have a technical assistance and to provide the financial assistance to the entrepreneurs, those who are going to set up any new industries in the India. Next function, facilitating technology transfer. So NIDC facilitates the transfer of technology by fostering collaborations between domestic industries and foreign technology providers. So they provide as a medium between the Indian technology providers as well as the foreign technology providers. When there will be an exchange, so they are going to support the Indian technological providers in adopting to the new technology transfer. So the next function is promoting joint ventures. So NIDC promotes joint ventures between the Indian and foreign companies to leverage complementary strengths and resources. So that means like the NIDC helps the Indian companies to have a connection with the foreign companies. So in brief, I can tell that NIDC helps in the increase of the foreign direct investments in the country. Next function. Yeah, so these are the functions of NIDC. So these are the important banks that are being efficiently operating in order to have a sufficient solutions or sufficient assistance that should be provided to the industries in India. So we have learned about the objectives and functions of all these banks. So this is a very important for your examination point of view also. So next we'll talk about the non-banking financial company. So non-banking financial companies are a kind of a companies which are again involved in the exchange of money, that means accepting of deposits, but they are not into the lending of loans to the people, or lending of loans to the people who are in need of it. So they are the companies who are involved in the finance related matters, but they don't provide any such kind of banking related services to the public. Okay, the non-banking financial company is a company registered under the Companies Act 1956, engaged in the businesses of loans of advances, acquisition of shares, stocks, bonds or debentures, or securities issued by the government or local authority, or other marketable securities of a like nature. In case of leasing, hire purchase, insurance business, chit business, but does not include any institution whose principal business is that of agriculture activity, industrial activity, purchase or sale of any goods or any other securities, providing any services and sale or purchase of construction of immovable property. So this is the official definition given by the Reserve Bank of India. So I'll try to decode it to you. So a non-banking financial company is a company that has been registered in the Companies Act of 1956. So wherein it has been engaged in the services like accepting the advances, acquisition of shares, or stocks or bonds or debentures or any securities issued by the government or any local authorities. They can purchase the shares or they can procure the shares or provide the advances and to acquisition of any kind of shares or debentures or bonds that has been issued by the government or any local authority, or other any marketable securities like nature of leasing, hire purchase, insurance businesses, chit businesses. So these all comes under the non-banking financial institutions. So that means leasing for companies, hire purchasing companies, insurance businesses or any chit businesses comes in the non-banking financial institutions, but does not include any institution whose principal business is that has been related to the agricultural activity, industrial activity, purchase or sale of any goods or services, or providing any services in case of sale or purchase of any immovable property. So that means they are not providing any such kind of loans or advances in case of these kind of activity like agricultural activity, industrial activity, or any purchase or sale of immovable goods or services. So this is the basic definition of non-banking financial companies. So we'll see what are the RBI measures for NBFCs. Under that, first is regulatory framework. So the RBI establishes and maintains a robust regulatory framework governing the operation of NBFCs. This framework encompasses prudential norms, capital adequacy requirements, assets clarification standards, and provisions norms, and among the others. So they usually have a regulatory framework. That means the norms or regulations that is been designed by the RBI in order to have a, or in order to call them as a non-banking financial company. So what are the regulations to maintain a norms or to maintain the rules and regulations inside the company in case of capital adequacy requirements or any kind of assets classification standards. This is the first point. Then prudential norms. So RBI imposes prudential norms on non-banking financial companies to ensure the safety and soundness of their operations. So they provide some rules and regulations in order to have a safer and any soundness in case of the transactions relating to the money. These norms cover various aspects such as capital adequacy, income recognition, assets classification, provision and exposure limits. So they provide the norms in case of capital adequacy, then income recognition, asset classification, provisioning and exposure limits. So next measure is about asset quality and provisioning. So RBI require the NBFCs to classify their assets into standard, substandard, doubtful and loss categories based on the quality of assets and repayment performance of the borrower. So they usually need to submit the records to the RBI every annually. So under that, the RBI requires or the RBI suggests the NBFCs to divide the assets as doubtful, standard, substandard, loss categories based on the quality or the performance of the assets. So next is about the risk management. So RBI emphasized the adoption of robust risk management practices by NBFCs to identify, assess and mitigate various risks including credit risk, market risk, liquidity risk, operational risk and systematic risks. So they provide the proper measures in case of maintaining the risk management inside the company in case of the types of the risk that usually they face, that is credit risk, market risk, liquidity risk, operational risks and systematic risks. So next measure is corporate governance. So RBI lays down guidelines on corporate governance to promote transparency, accountability and integrity in functioning of NBFC. So they usually provide the regulations in maintaining the transparency, accountability and integrity in the statements of the NBFCs. So these guidelines cover areas such as broad composition, director qualifications, risk oversight, internal controls and disclosure requirements. So they provide the assistance in case of human resource management, fund resource management, risk management inside the company. Next measure, supervision and inspection. So RBI usually conducts regular supervision and inspection of NBFCs to assess their financial health, compliance with regulatory norms, and adherence to the prudential standards. They usually have a inspection check on NBFCs regarding the transaction of money inside the company, regarding their financial health, and regarding the financial statements that they have been maintaining. So next is about supervisory reviews involve on-site inspections, off-site inspections, data analysis, risk assessments to identify the emerging risks, weaknesses in governance or operations, and areas requiring corrective actions. So these are the areas that they are going to have a clear check supervision on the NBFCs. Next measure, regulatory report and disclosure. So NBFCs are required to submit periodic regulatory returns, financial statements, and other information to the RBI to facilitate supervision, monitoring, and analysis of their activity. So like I have told, they usually needs to submit annually the reports of financial statements, any other information to the RBI that needed to have a proper supervision, monitoring, and analysis of the activities. So RBI mandates NBFCs to maintain transparency and provide accurate, timely, and comprehensive disclosure to investors, depositors, and stakeholders regarding their financial condition, performance, risk portfolio, and governance practices. So RBI also suggests the NBFCs to maintain a transparent records to the shareholders, stakeholders regarding the deposits, and regarding the risk management, and regarding the performance of the assets inside the financial companies. So next is about liquidity management. So RBI prescribes liquidity management guidelines for NBFCs to ensure they maintain adequate liquidity buffers to meet their financial obligations as they fall due. So they also suggest the NBFCs to make sure that they also have a proper liquidation opportunities to make sure that if any such kind of risks they are to maintain, so they can immediately encash the risks, or they can control the risks through the liquidity of the assets. So these are the important measures that usually RBI takes place. So we have learned about different banks. So we have learned about all the banks and their objectives and functions of it. So these are important topics in your second unit. So in the coming unit, so we are going to learn about unit number 3, financial services. So what is a financial service? The meaning, objectives, functions, characteristics, and types of financial services. So with that, I have completed the unit 2 chapter whole. So I request you to, again, if you are having any kind of doubts or any questions, so please look into the sessions once again and try to understand the objectives and functions of it. So, and we have also learned about the non-banking financial companies and what the RBI measures for it. So this is also an important topic for your examination. So in the coming session, so we are going to talk about all these topics in the next session. So I'll meet you in the next session. Thank you so much.